Well, hello there, traders and investors. I'm LA Little, and this is your daily NeoTA wrap. We take a look at these markets. We're doing it from a neoclassical perspective. And what does that mean? That means that we're looking for areas of significance on the charts. And in doing so, we're looking for tests of those areas to give us indications about what's really taking place. That's how we get clues. That's how we figure out where supply and demand is. And that is the neoclassical model that I developed. I do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. Archived on YouTube. It's under the channel LA Little. And if you haven't subscribed, you can reach up in the right-hand corner and do so. That will get you on a list so that anytime I push public content, you'll get a notification. As far as notifications, if you want some real notifications, hit the Get Started button. What you'll do is get my portfolios. You'll get these things that I talk about but can't give you all the details. For example, last night I said that we were entering a trade. We'll see how it works out and I'll let you know. Well, tonight I'll let you know, since we actually made that trade in the GDX today. So, or actually it was last night we took on the position. Let's move to the numbers here. What happened? It was a flat day, pretty much flat across the board. They try to break it down again. That's like 4 times in the last week and a half or 2. Can't break it down. Oil, the culprit, down 3% again today, knocking the socks off there. But you had that reversal I was just talking about in the gold. Could have made money on that side if you were with me. The DAX, the CACs, pretty much down early as a result of what was happening in the U.S. markets. I expect they may have a little bounce tomorrow as a result. And bonds kind of flat. Let's take a look at the charts and see what we got. So if we take a look here, let's pop in. Let's start with, matter of fact, let's start with the S&P. So we actually had some subtle signals today in the indexes. We didn't really have it follow through with respect to the rest of the market. In other words, the sectors themselves, you had a little bit heavier volume on them. But when you look at the indexes, all your indexes are going to look the same, right? Less volume than the day prior, and it undercuts the day prior, reverses, in this case does like a little pickaxe reversal. That's saying it's going to try to go higher. You got these little tails I was just talking about. There's one there, no one there. Here's one, there's one there. And you just keep going back, right? You got them all over the place. Every time they try to take it down, buyers creep in, start buying it back, and push it back the other way. And so new, not new, but the same scenario, right, where you're trying to push it down, you can't. Here's that same thing on the NDX, or actually on the NASDAQ composite. If we pull up the NDX, you'll see the same thing there. In other words, hammer reversals, lighter volume, that usually is going to get you a move back the other way. Now, I tell people in my mentoring sessions all the time that there's a lot of things that you can do, and if you want to get involved, just hit the Get Started button here on the TA Today site. But there's a lot of things you can look at that give you signals, right? And these are just pure candlestick signals. And that is that when you get under a candle like this, right, and you get an actual reversal, in this case a little pickaxe, we got hammers elsewhere, the ideal entry point is right there. It's the bottom of the bar prior that you're testing under. And if you get that entry tomorrow, that's your ideal spot. Should not get back underneath the hammer's low. Gives you a pretty good place to enter without much risk and a reasonable probability of succeeding. So those are the kinds of things that experience brings. Those are the kinds of things that I bring to the table, along with, of course, the neoclassical model, which you can't get anywhere else. Finally, if we look at the Russell, that was the Russell, that was the undercut back over, so a pickaxe reversal there too. Overseas doesn't look that interesting. I'm going to pull over to the OX market, and in particular I want to look at the oil market real quick and the dollar, because those are what are moving things right now. So let's take a look at the dollar first. So the dollar had done the big push, right? Expectations that we're going to get a rate increase all of a sudden, and that changed the whole thing last Friday. Was it last Friday? Yeah, I think it was last Friday. And so we got a big push up on that. And then that was on the Yellen speech, right? And then now we're coming into an area that has anchored support. or resistance in this case. And that is that if you look back over here, where's all your volume, where's your wide price spread bar? Well, this bar is a very wide price spread volume, high volume bar. That is a tough area to get over. And if you combine it with the others next to it, it's this little zone right here. And what did we just do? We went right into that zone. That's where you would expect it to have difficulty. Did an over-under yesterday on lighter volume. That gives you kind of a freebie chance to short this thing if you want to do that. Take profits if you want to do that. Depending on what your trading plan is, that was the setup. This pulls back. Now what is it doing? It's coming into this wide price spread bar and it's coming back with no volume. Now what does that usually mean? Well, that usually means it's going to stop it dead in its tracks, and that will be the test tomorrow. So you already got the test up here, right, into this area, pulls back, gives you the reversal, gives you everything you want. Now it's coming back into the other test. That test is first thing in the morning. We'll see how that one plays out. If we look elsewhere and go over to the oil market, I'll just use the USO and got some expansion there. Let me see what this one looks like. The other ETF, the OIL, looks the same, not the expansion. So it comes back pretty deep. This is kind of in a difficult spot here, given the way it's come off. And so I think oil is going to have to find itself very quickly, and we're going to be testing the lows again before you know it. And that's a problem, primarily for the Russell, given the bank stocks concern. So last night I told you about the trade that I would share with you as soon as it made sense, because I certainly didn't want to give it away to the world. I gave it away to my members last night, and what we did yesterday is we bought into this steep decline. And you may wonder why in the heck we did that, right? Well, if you look over a little bit farther over, can't quite see it on this chart. If you pull over the GDX weekly, you can actually see it on the weekly chart. You're coming into an area here that had strong support, and that was into this area here, this bars, and then these bars over there. And as you come into those after a steep decline, you should see the buyers show up, right? That's the way it usually works. And so there was a pretty good case that we were going to see buyers show up and allow us to trade this back the other way. Now the bad thing is it left a little volume up underneath. That says that we can actually trade it back down there, and we may do that as soon as tomorrow, which is why, of course, we took profits today. Took them up here as we went up. Got a nice spike. It was up almost 4% today. That's the kind of move you want to catch. 3.65. Opened lower, closes much higher. Wide price spread, heavy volume bar. It's a good sign. Why did it make sense to do it? Well, for what I showed you, look at the decline straight away. You come down that hard, that fast, you're going to get a bounce. You have to time that bounce. You have to look for areas of significance, which we did on the weeklies. And that is how you set up a good trade. As far as where it goes next, well, like I said, you could come back and test it at any point. You may get a little bit more of a bump. But don't get too excited here. This thing's got a lot more work to do after a 20% decline off the top. If we flip over and look at gold itself instead of the stocks, here you had the same sort of a scenario, right? You had a scenario here where you tested into it. You could have also looked at this for the stocks themselves as well, because if gold flips around, the stocks are probably going to do the same. They're just going to move faster. Look at the big bar you're coming into. Look at that bar of significance. Wide price spread, heavy volume. That's about as big and tough as they get. As you come into it, what does it do? No volume as it's selling down into that. You're going to flip this thing around, try to take it back the other way. Folks, there's a range up here. It's just range trading up here. You know, whether it gets up that high or somewhere else. As a matter of fact, I was doing a mentoring session with a gentleman down in Texas today, and we were talking about this. And again, I can't give the whole program away for free. If you want to know how to do this, or if you want to just see what I do, just get started, right? 19 a month, 15 a month if you're doing it yearly. I mean, you can't get anything like this anywhere else for these kinds of prices. But the point is that there is a range. You should try and trade that range. The long-term time frame on this looks strong, not weak. And if you look at it all the way on the monthly, it looks just as good. If you're not trading gold to be upside, you're probably missing out on a pretty good opportunity. So that's where that sits. As far as what else, tomorrow, you've got the employment number. They began to try and price in that employment number, but the market keeps ignoring that, and it keeps bouncing right back. Subtle signs tonight that it's going to try to push higher tomorrow. Can it trade lower? Sure. I mean, anything's possible. But the subtle signs seem to point the other way. That's consistent with the trend. Gold itself, if we have a strong number, is going to pull back. And if we don't, gold's probably going to surge some more. So you're going to see that same relationship we've seen before, where bonds and gold benefit from a weaker dollar. Stronger dollar hurts them. Equities, they don't seem to care, folks. They just keep going up. As I said last night, if you're going to short this market, you're probably going to short it right to the bank and give, you're going to take a withdrawal and hand it to somebody, because by the time it breaks, you're probably going to be broke. Stay with the trend, folks. Don't fight it. I know it's hard to believe, but this market keeps wanting to go up. If you get a setback, use it, but don't try and time it. Not unless you get a good signal, and we don't have any good signals on the downside. Have a great night. That's it for this week. Tune in on Sunday. I do show Sunday evening. We look at the weeklies. And if you want to tune in sooner, then as I say, just pop in, register, come into TA Today, get started. All the good stuff that we do, you can get for a price that you can't get anywhere else. And the kind of information you get from me is unlike what you will get anywhere else. Not only that, you get to sign up for the mentoring program. 6 months in, become a mentoree, right? Get mentored. Pop in here, read about it, see what I'm talking about. I think you'll be impressed. Take care. I'll see you next time.